Hello and welcome back to the channel. Today we're taking a look at Disney stock, ticker symbol DIS. As a disclaimer, this is not investment advice. This is just a research video that I put together meant to be educational as well as entertaining. We're going to take a look at a few different news clippings and articles surrounding the company, and then we're going to jump into the stock. Thank you for your time. Please continue to like, share, and subscribe. Please enjoy.
Well, it's wonderful. It's wonderful. You get to reach people in a sort of an immediate way with the pictures. You work for years, and then it's quite a while before you know how what you're working on is going to come out, how it's going to be received. But with television, you know, well, in a very short time.
Do you find it's a burden, Walter, over the other working habits? Or
no. I found it very stimulating.
Very stimulating.
For the whole staff, everybody, it's been a great stimulus for the whole organization.
Fine. That's good, you know, because that makes it sound like Mr. Walt Disney's going to stay in television, which is what I really wanted him to do. Walt, thanks very much. It's glad to have you with us, and nice of you to have been our guest. Will you say hello to Bennett?
People on the outside, I think, don't understand the Imagineers. That is the heart of the Disney company. That was Walt Disney's personal baby, and they're highly creative, highly respected within the company, and they're all extremely upset about this. And while the money sounds good, when you realize it's $500 million over 20 years, that's $25 million a year in savings. Really, for a company like Disney, that's barely a rounding error, and it has created this massive dissatisfaction there.
Hey, Jim, it's Tim Seymour. Hear you on that, and certainly that kind of dysfunction at the top could hinder the creative process. But quickly, as you look at the studio and you look at the release schedule and the slate and really what is this powerful flywheel dynamic for Disney into their distribution and their theme parks, how are you assessing the next 12 months?
Well, I think they have been performing very well. I mean, the recent earnings were quite good. The stock has not responded for reasons I think that go beyond the immediate earnings issues, but I think the company has been working well. The problem is that that the creative thing is the heart of the company, and there is no more industry than Hollywood entertainment that depends on relationships. And Bob Iger was the master of that. He could take a star, a director, a studio executive to lunch or dinner, and they always came out feeling great about it. It's going to be hard to replace him in that respect, but Chapek has not shown that interest in or affinity for the creative people that fuel that pipeline into Disney. And many of these recent successful projects have their roots, years ago, and Iger himself continued to play a very big role in the creative process until he left finally, not that long ago. So I think that this is one of the things that people worry most about, which is Chapek's relationship to the creative community.
Any chance maybe that Bob Iger could come back down the road? I mean, we just saw it with between Kevin Johnson and Howard Schultz, so it's making everybody think, bring back the storied predecessor.
Well, I would never say never. I think that's an unlikely scenario. Bob had a long run there, very, very successful. I'm not sure that he would want to step back in, except on maybe a very short-term basis. But there is, and again, I don't think the board is anywhere near replacing Chapek at this point, but there are candidates out there. I mean, Disney has a long tradition of promoting from within, but in their former COO, Tom Staggs, and Kevin Mayer, who was the architect of their very successful streaming strategy on which they've now pinned the company. They do have two former executives sitting out there who would certainly seem to be very viable replacements should they reach the decision that they need to do that. But by no way am I suggesting that the board is at the point of getting rid of their recently handpicked choice as CEO.
All right, so let's just pay attention right here. Some of these stats, right? It's down 15.77% year to date. It's at its bottom of the 52-week range, right around that $128 mark. Some of the largest quarterly institutional transactions, it's definitely held regard as a buy or as hold, or a lot of analysts across the board definitely see this as perhaps an opportunity here. Again, this is not investment advice. I'm just highlighting some of the biggest institutions that are holding this: Vanguard, BlackRock, SSGA, State Farm, Geo, T. Rowe Price, Northern Capital, Northern Trust, Morgan Stanley, Fidelity, BlackRock. The top 10 mutual funds holding Walt Disney: Vanguard, the Total Stock Market Index, Vanguard 500 Index Fund, SPY, Fidelity, iShares, Vanguard Index Growth Index, Vanguard Institutional Index, Spider, iShares, IVV. So it is definitely a quintessential company. It's definitely like a staple that a lot of people have in their portfolios. It's one of the very first that I allocated to Madeline Penelope. So let's just continue. Let's take a look at this Investopedia article. Disney's fourth quarter 2021 results disappointed. The decline was primarily due to Disney Plus slowing down. And I'm not going to go through the entire article, but let's just pay attention to what's going on, right? This is not a political channel whatsoever, but a lot of what's happening in Florida with I tell you the truth, I don't even understand what the hell is going on down there. But apparently they're trying to slow down people from going into parks because they have a problem with, or I think the right has a problem with the parks easing of, or their stance on LGBTQ plus community. But anyways, the Disney metaverse. I just wanted to bring this up to mind that during its earnings call, Disney also teased the idea of a Disney metaverse, speaking about the company's blurring of physical and digital boundary. I think that would be sick. So let's continue. All right, let's jump into the chart. So I have a Fib retracement from its most recent high all the way down to its most recent low, which we are currently sitting at around $130.41. Now, it has to do a lot. Now, normally I don't like to look at things so short term. However, this is holding in the A portfolio, so I want to pay attention to what's going to happen, whether or not I plan to add more to my position or not. I think that for now, at least, it has a lot of room to the upside, so it has more room to fly up, I believe, than to continue to fall. If it does continue to fall, I'd be surprised. I think a lot of stuff is priced in. A lot of things that are happening with the Fed and rate hikes that are continuing to happen throughout the year and all the way on through next year. So again, with these Fibonacci retracement levels, they all need to, in my opinion, they need to hit these levels and become levels of support before it continues to trend upwards. Now, again, I see here, I just like to look back a little bit, and this current level where we're sitting at, it actually, does happen to be a nice little level of support, around the $130 mark. So the next level would be for me, obviously, in the approaching the mid 130s are levels that I'm going to be keeping an eye on. If it can catapult over the 130s into the 140s relatively quickly, I wouldn't be surprised. However, again, it needs to turn these levels of resistance in the 130s to 136. Once it can get above perhaps this 136 level and turn that level of resistance into levels of support, then I like to then look back even further, right? So if it does reach those levels of support, then where can we look to next? And of course, it's really easy to say, oh, just to the moon, right? Oh, it's just going to go on forever. Well, if you have the appetite for volatility, I could definitely see this one, going down a little bit more for sure. Anything can happen again. But if I just look back, this was touching 200 not too long ago. So I don't want to be overly poetic, but if it can get there, if it was there, I can definitely see it happening again. There's been a lot of downturn in the stock, a lot of stuff going on in the headlines. So I try not to let things like that get in the way of my vision, but that's my chart for Disney. All right, I'm going to leave it here. I want to thank you for your time. I really do appreciate it. Please continue to like, share, and subscribe. Hit the notification bell. If there's another company, ETF, IPO, cryptocurrency that you'd like to see me research, just drop it in the comment section below and I will get to it as soon as possible. Thank you. It really does help with the channel. If you didn't like it, leave a thumbs down. Either way, it's all good. And until the next one, take care.